So the S&P 500 rose 5.9% past week. That is the best week since November 2022.
Mm-hmm.
So what do you think caused the S&P to rise? And is this a sign going forward for the rest of the year and into 2024?
Yeah, the number one thing that causes it to rise is that interest rates are going to be paused. So that sent the market into a frenzy. Also, too, if we're going to be very honest, mutual funds, hedge funds need to bring on clients that they're wrapping up. You can't have the market in a tailspin to the downside. So there's a couple of things that are playing a couple key factors. The economy overall is still weak, even though no one wants to say it. But because they are guessing that interest rates are going to be hiked, which allows for growth in a lot of these sectors. Like, Square went up 20%. There was a bunch of companies that went up 15, 20%. On Friday of last week. This Monday has been great thus far. The number one reason, and we talked about it in Market Monday Chicago, the indicator that matters the most is the yield curve and then interest rates. If interest rates are not going any higher, it allows for growth in the stock market and businesses worldwide. So that's the reason why.
Yeah, and we started last week with the word unfortunate. Bad news for jobs means good news for stocks. And so when we're talking about bad news, they said that only 150,000 jobs were added to the economy, which is an indicator that the economy is slowing down, right?
Yes.
If the economy slows down, then the Fed says, all right, it's slowed down to a point we don't have to raise rates. When rates don't get raised, we see what happens to the stock market, right?
Yeah.
And so they paused it for November. And now there's a probability, I think it's at 95%, that they will be frozen again for December. And so if you look at 2 months of freezing rates, that's good for the stock market, right? In addition, we talked from a historical standpoint about the S&P and what happens to it in November. It's the best month to trade.
Yes.
The timing couldn't be even better, right? And so you take a couple of these factors in addition to the unemployment rate, again, another job indicator, that rose to 3.9%. And so more people are unemployed, better for the economy, better for stocks because money has slowed down. And then, Ian, you talked about the treasury rate. And so this is interesting. The 10-year treasury rate, it ended at 4.5%, which was almost 3 points down from 4.8% a week ago. It was the steepest drop since March. And so you take all these things into account. You talk about wages slowing down, all these things that sound like terrible for the average person actually end up being good for the stock market.
Yeah, in September, we already know it's the worst month. You're going to drop normally 1%. That's a great time to buy. A lot of tax rebalancing is happening in October. Mutual funds are deploying capital for the fourth quarter, usually in October and November. So it's a bunch of factors that kind of played in. But that's why I always say, like, the market is rigged to permanently stay up. As much doom and gloom as there is, the indexes are going to be great. People asked me yesterday and this morning, is 2 Tech 2 Index still the way to go? Is VOO up? Is VTI up? Is the S&P up? Yes.
Yeah.
So hold for the long term and you'll be good.
Yeah, higher yields means it's going to be more expensive for not only you, but for companies to borrow money. So as those numbers come down, you'll see more people investing in companies and they're going to have more profits because of that. So it's just an inverse relationship. And again, it feels like to the average person it's unfortunate, and it is, but this is just how the economy works.
And we're in a very interesting time too, because if you don't put the capital and deploy the capital somewhere, inflation is literally going to set it on fire. So you can't sit on cash like you could maybe 4 or 5 years ago and be like, no, I'm fine. Like, if you're saving, you're actually losing money. So now you have to deploy the capital to real estate, to angel, to VC, or to stocks, or risk losing 6 or 7% on the capital that you have. And if you have a lot of money sitting, 100 grand, 200 grand, oh man, it's burning a hole in your pocket and in your portfolio at the same time.
At the same damn time.
Yep.
So let's talk about crypto and stocks. Base
Yes.
reported its 7th straight quarter of losses, but it does seem that crypto is on the uptick these days. XRP. Mike Jones posted an XRP post today.
The Mike Jones?
Yeah.
Who is Mike Jones coming?
XRP is sharply on an uptick today. So at what point do you see a good buying opportunity for Coinbase, if possible?
Yeah, it's currently at 85. I like it at 72. To me, Coinbase is a lagging indicator for how crypto is doing. So, of course, Bitcoin, XRP, some cases Ethereum, I would want to look there first. But Coinbase is going to be a laggard because they have a lot of regulation issues. But if they go on a tear, it's going to be a great sign that crypto is going to do well. But I like it at like around $72.
Here's the interesting part, Ian. Like if you look at it, the context of it from year to date, it's up 128%. The stock.
Yes.
Right. So it's one of these things when we look at it from we scale out a little bit. It actually is up, but they've had a negative quarter for the 7th time in a row, and there's a lot to do with that. And some of the reasons is that the trading volume is down, right? And so if we look at when Bitcoin actually started to peak around late October or maybe late September and into October, what happened around that time? The SEC decided that, hey, we might be able, there's an investigation, hey, we might be able to make an ETF out of cryptocurrency. And so you start to see the numbers start to spike. But that happens in October, which is not this quarter, the third quarter that just reported.
Yeah.
And so you have to start looking at things from a whole scale standpoint because, the next quarter you might see that. And here's the translation, right? If the trading volume is down, that means the revenue that they get from transactions is down.
It's down.
And so if that happens quarter after quarter, they're not making money, even though we're watching the stock climb because people are actually in the space, and we've seen an uptick. The negative correlation is going to be there until we start seeing people trade more. This isn't like 2017 where people were on the platform and it was a craze. We're starting to see people slowly come in. The SEC, like I said, that report helped it. But it's interesting. Like, so when you're looking at the stock price and you're looking at the earnings reports, you got to have a totality look at it.
Brokerages are never a good business to invest in long term because you really can't control the products. You have too much negative exposure. And also there's usually a bunch of companies that merge together. Like for those of you who are using TD Ameritrade or were using TD Ameritrade, now you need to switch over to Swap to be able to access Thinkorswim. So I don't like the brokerage business, but for me, Coinbase is a lagging indicator on crypto overall. Yes, it has had that rise over the last year, but it's a far cry from that 337, 340 area it was at the craze. And I told you guys, if the ETF got approved, Bitcoin to go to 34,985. We've reached past that point. If I made you money, please put yes in chat.
Yeah.
But I think we're going to see a rise in crypto over the next year and a half for sure, especially as the economy is getting worse.
And this was the closest quarter that they've come to actually having positive revenue. I think they were like 2 million, maybe 3 million off. And so the signs are pointing to next quarter, obviously with what we just talked about with the approval of the ETF pending, there could be a change in the next quarter. Yeah.
So do you see any stock opportunities related to crypto? Obviously, Coinbase is a stock that, is like, relying on the success of cryptocurrency. But like if somebody wants to invest in the stock market and tie it to some level of crypto, boom, do you have any stocks that you think could be beneficial?
Only ones I'm leaning on right now directly are the cryptocurrency. So I'm Bitcoin, XRP. I'm a fan of.
What about a Bitcoin ETF or like a cryptocurrency ETF?
No. Here's the reason why. It's like if I try to start a football league, which Vince McMahon has done 3 times, I think my biggest competitor is the Goliath that cannot be beaten with the slingshot and the rock. So when BlackRock finally announces their ETF and all the institutional money starts to flow through them, it's going to be hard for the other players. Even like you can say, I like MicroStrategy and I like Michael Saylor, but I don't think he can defeat BlackRock. Like the game is not fair. We got to have some honest conversations. 2023, 2024. The game is not meant to be fair. The purpose of capitalism is to get an edge that no one else can beat. We want to talk about real generational wealth. You can only have, and next year we got to have a conversation about generational wealth being overrated. But you can only build generational wealth if a limited number of people are able to do something that you're not able to do. I don't want BlackRock and Vanguard as a competitor. I said 2 years ago, I think everybody should stop screaming about what their plan is because the banks are going to come in and take it over. Here we are. It's too late. XRP is about to get into the fold. It may be tough for Ethereum. here we are. So stocks directly, no. I would look at what companies in that top 7 are hiring. Meta may be an ancillary or tertiary play. Apple will eventually do something big in the crypto space, but as far as the ETFs, no, I wouldn't do it.
So yeah, and just to add to that, right? You said that the SEC might approve the Bitcoin ETF. Well, Coinbase is fighting the SEC right now, right? They're still under a legal fight for what they had the lawsuit in June about them being a legal securities exchange platform, and so you're battling that too on top of everything inside of the space and from competitors who are trying to now create ETFs for the space.
Yeah. You don't want to fight a trend. It's a lot easier to push a boulder downhill than it is up.